Moving through the early part of the trading day, and it's time for a quick reset. I'm Grant Mercer, this is Storm Stock Solutions, and let's bring some clarity to the chaos in today's markets. The tone right now is classic late-cycle tug-of-war. Speculative ideas and AI winners are still grabbing headlines, while a growing chorus of voices is warning that sentiment might be getting stretched. Let's start with what's catching traders' attention this hour. According to reporting from MarketWatch, Saxo Bank is out with its annual list of outrageous predictions for 2026, and they're certainly living up to the name. Scenarios like gold at $10,000 an ounce, a quantum computing-driven crypto collapse, and costly AI scandals that rock the tech space. These aren't base case forecasts, but they do crystallize the big themes driving positioning today. Inflation hedges like gold, the fragility of the crypto complex, and whether AI enthusiasm has overshot reality. Staying in that AI lane, MarketWatch is also highlighting fresh gains in one of the year's hottest AI-related names, Credo. The company's putting up big growth numbers and, crucially, diversifying both its customer base and its product lineup. Traders are watching stories like this because they reinforce the idea that the AI trade isn't just about a handful of mega-cap leaders. It's filtering down into the picks and shovels plays in networking and connectivity. On the macro and digital asset side, Bitcoin is back in the conversation for a different reason. As Jurika Dujmovic writes at MarketWatch, governments are increasingly using cryptocurrency as a tool for geopolitical leverage and a way to reduce reliance on the dollar. That's a structural narrative. Whatever Bitcoin does intraday, the idea that sovereigns view it as part of their strategic toolkit can help underpin longer-term interest and volatility in that space. Now, alongside all this optimism, there is a clear note of caution building. One piece from Mark Hulbert, also at MarketWatch, flags that market timers have reached a point of extreme exuberance. Historically, when short-term sentiment indicators get this frothy, it's often been bearish for both stocks and even for classic havens like gold. That doesn't mean a top is guaranteed, but it does suggest we're in an environment where chasing strength blindly could be an area to handle with care, and where pullbacks can come faster and harder than they have in the last few weeks. In the background, there are a couple of under-the-radar stories that could matter more as we move toward year-end. Andrew Keshner over at MarketWatch is detailing new tax rules that may give some investors an incentive to delay charitable giving until next year in order to maximize deductions. That kind of shift in behavior can affect year-end flows. Everything from how much stock gets donated to foundations to how households think about cash versus securities as we approach the calendar turn. Another sleeper theme is investor psychology itself. David Widener has a column headlined, "If you're this type of investor, get out of the stock market now." The punchline there is less about calling the top and more about matching risk tolerance and time horizon to the current backdrop. As volatility expectations rise and sentiment indicators flash warning signs, professionals will be watching not just price action, but also who's likely to panic first if the tape turns. Into the next hour, I'll be watching three things: whether AI beneficiaries like Credo can hold on to their gains, how Bitcoin behaves as this narrative about geopolitics and de-dollarization circulates, and whether any fresh data or headlines push those exuberance gauges even further into the red or trigger some profit-taking. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,